Welcome to Module 3. We have mastered the Nigerian market, but true financial security comes from looking beyond your borders. In this module, we'll be demystifying the process of investing in the US, UK, and other financial global markets, addressing the practical challenges like funding and taxes. So stay tuned because we have a lot to discuss in this module. See you in my next video. All right, so in this module, that's module 3, we'll be looking at different things, how to identify the different pathways for Nigerians to access foreign stocks. Then we also understand the role of domiciliary account and the forex requirement, things you need to open an account. Then we'll look at select appropriate international and local broker platform. This one is very, very important because some brokers do take advantage of naive investors, right? So we're going to grasp the concept of currency risks and basic hedging, master the logistics of trading across different time zones, then navigate international tax obligations and discover popular foreign stocks and sectors for Nigerian investors. So these are basically what we are going to look at in this slide, and our goal is just to make accessing global market as easy as trading in the Nigerian stock markets. So this module is focused on actionable steps and risk mitigation, ensuring that you can invest confidently regardless of where the market is located, so that at the end of this module, right, we should be able to invest in both the local market and the foreign market. See you guys in my next video. Why look beyond Nigeria? We have a lot of reasons why we need to trade the foreign stock exchange, right? Number one is that it helps you to fight the issue of inflation. Also, it also helps you to diversify your assets. Now there's what we call currency hedging. Currency hedging has to do with holding assets in USD or GBP, that's Great Britain pounds. It protects your wealth from naira devaluation. It has to do with what? The fluctuation of the exchange rate, the price of naira against relative to dollar, right? Currently now the price of naira relative to dollar should be around 1,500 naira is equivalent to $1. So this currency hedging, it helps us to hold most of our assets in a hard currency to protect our money from inflation. Then we have number two, diversification. It also helps us to have access to sectors that you might not even find in the Nigerian stock exchange. Global tech sector, biotech, technology, AI, and the rest of them. These sectors might not fully be in the Nigerian stock market. So diversifying in the foreign stock market helps you to what? To invest in such sectors. Sectors like logistics, insurance, gold, name it. You have a lot of them. Then also liquidity. Major foreign markets offer higher trading volumes and easier exit strategies. So when we talk about liquidity, the foreign stock market, they are the best when it comes to what? Liquidity. They trade the market consistently. Most of us in Nigeria sef, most people, if I'm not mistaken, almost 60% of citizens in Nigeria don't know about this stock market, right? But over there, they have a very background knowledge about all these things, the market and the importance of investing in the stock market. Then we have another point here, which is the growth potential. It helps you to assess the world fastest growing and the most stable company. Why the Nigerian stock market offers exciting opportunity? It is often prudent to what? To diversify. The number one reason for global investing today is currency hedging. I've talked about currency hedging. By holding US dollars assets, you ensure that the purchasing power of a portion of your wealth is protected, even if the naira fluctuates. So that's the goal of holding your currency or diversifying in the foreign market. I'll see you guys in my next video. In this video, we'll be looking at how Nigerians access the foreign market. So now we have two pathways. We have the first one, which is through the local fintech app, which is the easiest, and we have part two, which is the international brokerage account, right? So now, fintech apps or fintech companies have made it easier for financial transactions. So anywhere in the world you are, you can access this stock market using your what? Your fintech app. So we have Nigerians based platform like we have Trove, we have Bamboo, we have Chaka. But I would strongly recommend Bamboo, right? That's the one I personally use. So you can check the three of them out, but Bamboo, that's the one I use, and that's one I recommend. I do recommend for my clients to use. Then you can easily fund directly with Naira, right, on Bamboo, although they have FX rate, that's foreign exchange rate, but it's not fixed, right? It fluctuates based on the current happenings and the current exchange rate. And it also have a simpler interface, but you may have higher fees and restricted stock list. So the thing there is that it's not every stock list or every company that you might see on the fintech app, right? So that's the restriction. But at least it will give you access to the major tech companies. It will also give you access to the major global giants in the stock market when it comes to foreign investment. Then the part two is the international brokerage account. So here we have more control, right? So we have different global platforms like Interactive Brokers, Saxo Bank often required direct USD funding. So we have it also offers direct ownership, lower per trade commission and full market access. So in this second part, you have a full market access to trade any stock, right? To trade any stock. Then it requires dealing with domiciliary account and direct FX sourcing. So here you must have a foreign account, that's domiciliary account. Without it, you cannot trade. But the part one, which is local fintech app, which is also the easiest, you can trade the market, you can buy stocks, even if you don't have the domiciliary account. All right, welcome to this video. This is the biggest hurdle. You can't just send Naira to a US broker. You can't just do that, right? You need a domiciliary account to hold your dollars. The real work is finding dollars to put into the account at a favorable rate. This is where market intelligence and timing your funding becomes crucial. But just scratch that, right? What we're going to do here, instead of going through this obstacle, right, we are going to simply use our fintech app, which is the Bamboo. So you don't need to open a domiciliary account. You don't need to go through the stress. If you want to open it, good and fine. That should be for personal use. But this Bamboo app, what you have to do is just to fund with your wallet in your local currency, which is the Naira. Then you now convert it to US dollars. Then you can now be able to buy foreign stock using your US dollars. So I think that's the solution for the obstacles that is being placed by these domiciliary accounts and the international brokers, right? So I'll see you guys in my next video. Welcome to this video. Now, in this video, we're going to look at selecting a global trading platform, right? So since we said that we are going with the part one, which has to do with fintech apps, right? So we're going to look at things to look out for before you select a platform for buying stocks. First one is acceptance. Does your broker explicitly accept Nigerian residents in terms of KYC and address proof? And yes, the broker we are using, which is Bamboo, accept that. Then the fee, you have to compare the commission fees, withdrawal fee, and inactivity fee. Now, to some extent, the fee is fair. I would say that the fee is fair to some extent. I'm not checked out other brokers, but the fee is something that you can afford. $1, right? So it's fair. That's why I said even if they are charging you, it will not be advisable that you make transactions all the time. Like let's say, most people, since they are still battling with their emotions, they will buy a stock today, and if the thing is right, they will go and sell it in 1 week time. So you are dashing these brokers money, right? So that's not advisable. And in terms of security, the broker is regulated. So you have to ensure that your broker is what regulated by a major authority. And the bamboo that we are using is regulated by SEC, which is the authority we have here in Nigeria. And also you need to check the withdrawal and deposit options. Make sure that your broker accepts wire transfer from your Nigerian um local account, not domiciliary account now, right? So bamboo, they accept transfer from Nigerian local account, and they will now transfer it to your they will now exchange it for you in dollars. So these are the things you need to check out for before you choose a particular platform for your trading. I will see you guys in my next video. All right, so in this video, I'm going to look at the concept of understanding the currency risk. Now, when we talk about the risk, we say that your return is a combination of the stock's performance and the naira's exchange rate. Let's look at an example of a positive return, right? So, whereby there's an increase in your stock and the naira depreciates, you have a massive gain in naira terms, right? And the negative example is when there is increase in stock and the naira appreciates. Here we say we have a net loss in naira terms. So obviously what we are just trying to say here is that diversification in a stable currency helps you to fight inflation, right? So that's why we said we need to diversify in the foreign stock market so that we'll be able to fight inflation. Now, currency risk is your friend and your enemy. Let me explain. When naira falls, your dollar assets are more valuable. So when there is the naira falls, when we say that naira falling, what we're trying to say is that, let's say for instance, exchange rate is $1 to 1.5. When it increases to $1 is equivalent to 2,000, you will say that naira have what? Have fallen. So when this happens, right, we said that you have more money to yourself, because when you exchange your foreign currency into naira, you make more money. That's basically what we are trying to say. So your dollar assets are more valuable when naira falls, right? Then that's the protection we are looking for, to make sure that your assets, your currency is stable. If naira strengthens significantly, then when we're talking about strengthening of naira, we can now say that, for instance, if we have an exchange rate of decrease from $1 to 2,000 naira to $1 to, let's say, 1,000 naira, you see that all your investment gains is going to what? Is going to wipe out. So that's why I keep telling people that it's better you invest in the foreign market. I'm not saying, don't get me wrong, I'm not saying that investing in the Nigerian market is bad, right? That's where diversification comes in. So you invest here, and you reap from the both returns. So I'll see you guys in my next video. So since we are looking at investing in the foreign stock market, we also look at their trading time zone, right? They don't use the same trading time zone with Nigerians. Now for the US market, and in the US market, we trade in the New York Stock Exchange and the Nasdaq. the market opens by 9:30 a.m. to 4 o'clock p.m. Eastern time zone. If you change it in Nigeria, for those that are in Nigeria, it means that the market opens by 2:30 p.m., right? And closes by 9 p.m. Then for the UK market, the London Stock Exchange opens by 8 a.m. and closes by 4:30 p.m. Then for the Nigerians, it opens by 9 a.m. and closes by 5:30 p.m. Right? So US trading hours are in the late afternoon and evening in Nigeria. Then if you are not able to, if you don't have all the time to sit down and be waiting for when market opens and when market closes to execute your trades, is what we call limit orders. So you can use limit orders to execute trade when you cannot monitor the market live. So let's say you want to buy a particular stock at a particular price, let's say $6, right? So you can set is how we do it. I'm still going to do a video on that on how to set limits, orders, and the rest of them. This is how you're going to set it on your Bamboo app. So you just take the trade, you give it a command that when the price comes down to $6, you execute the trade. So anytime the price comes to $6, even if you are not in the market or you are not looking at your brokerage account, the market executes on its own automatically, right? So let's say for instance, if the price of a stock is $7 and you want to buy it at $6, you can set it. Once the price gets to $6, it will execute the trade for you. So that's the strategy behind using the time limit orders to trade, right? I'll see you guys in my next video. All right, welcome to this video. So in this video, we'll be talking about the international investment taxation, right? So the international bodies, especially the US, they love tax. That's one of the reason why their system works, right? So now we're going to look at how this affects us as a Nigerian investor. Now, there is what we call the tax treaty. Tax treaty is an agreement that you have between two countries concerning tax. So we say that we have no US Nigerian tax treaty. We cannot automatically claim the treaty benefit for the US market. Now, I explained earlier before now that we have two pathways to penetrate the foreign stock market. And the first one, which we talked about, was the fintech, going through the fintech app route, and second one, international broker. So this information is basically for those people that are going to go through the international brokerage route, right? This is what we call the W8BEN form. It's essentially for non-US residents. So they can file this with their broker to satisfy non-residency. So when you file this with your broker, I think what this thing do is that it will now reduce the amount of tax that the US collect from your dividend, right? Now, as a Nigerian resident, you are taxed on worldwide income, but the foreign tax credit prevents double taxation on the same income. So this is perhaps the most important administrative slide, right, in this model. So for if you are following the international route, that's the international brokerage route, you must submit this form, right? You must submit this form and keep that tax deduction in mind for your Nigerian filings, right? So you must submit this form, and I'll see you guys in our next video. All right, so in this video, we're going to talk about where to invest, which stocks should you pick, right? So we have diversified ETFs. So ETF is known as exchange traded funds. This is when you have a series of the best performing stock under one umbrella. right? So you can have a particular ETF that comprises of S&P 500, comprises of S&P 500 tech giants like Apple, Microsoft, Amazon, Google. So what ETF do is that they help you track, let's say, 100 good performing stocks that also pay dividend. Then we have the tech giants. They are basically known as the growth stocks, companies that dominate global commerce and software. We have examples: Apple, Microsoft, Amazon, Google, and the rest of them. Then we have consumer staples, right? Established companies that sell goods worldwide. We have companies like Coca-Cola and the rest of them. Then we also have companies that are into healthcare and pharmaceutical sector. Can also decide to buy stock from them. So we have different sectors in the market, in the stock market, that you can buy from, right? So these are basically where to invest. Now, where should you start from? That should be the question. If you are a beginner, I'm not advising beginners to start picking individual stocks. It's very advisable as a beginner to start with ETF, right? So there are ETF that helps you pick the best stocks in the market, and over time they pay you dividend, right? So for you to be able to pick individual stocks, you need to have a strong background in the fundamental and technical analysis. That's the only criteria, and as a beginner, you are still learning, right? So you still need to give yourself more time to perfect your fundamental analysis and your technical analysis before you start picking or you start trading individual stocks. Now, this instantly diversifies you across 500 major US companies. When you start trading ETF like S&P 500, that means you are buying a chunk of this 500 US company. So once you are comfortable, you can now start buying individual stocks. You can decide to buy stock from um from any tech giant. From in US, we have a lot of biotechnological companies, right? From pharmaceutical companies too, from logistic company, oil and gas, commodities. So, but first of all, I advise that you start with ETF. And this should be the last video for Module 3. Thank you so much for staying up to this moment. I will see you in the next module, which is Module 4.